Ladies and gents, ladies and gentlemen, welcome to Forex Light YouTube channel. And today I'm going to teach you guys how to kill NASDAQ. So without any waste of time, make sure you click the like, subscribe button and the notification one, so that whenever I drop another YouTube video, you can get notified, ladies and gents. So this is the Forex Light YouTube channel. So today I'm going to teach you how to kill NASDAQ, how to trade NASDAQ. This is a free strategy, guys. This is the free one. Welcome to the YouTube channel of the Forex Light. I'm here to bring the light to all those who are still in darkness. So this is how you go about, guys, when you wanna kill NASDAQ. Since you all know that NASDAQ is a very volatile pair and it's so nice to kill. So this is where the money is, guys. So whenever you wanna make money and change your life, this is where you come. NASDAQ. So me, I'm using Veracity Market. So that's the broker that I chose for myself, of which accountable trading it. And like this, you can find NASDAQ in so many brokers. So there's so many brokers of which they offer NASDAQ index. So this is the index. So what is NASDAQ? That's what you have to do, and you have to do and go research about it. So NASDAQ it consists of 100 strongest companies in the world, mainly in the US, of which companies like Microsoft, Amazon, you name them. There's plenty of them, guys. So yeah, so that's what NASDAQ is. So usually we're trading, I cannot say we're trading the company's performances to get it, because this is an index, this is a program of which it was programmed. The market is a system, so it's coded. So there's codings that are going on here. So these codings, they actually adhere to certain movements and influences that are made by the economic events, traders as well in general, because the market is moved by traders, but influenced by the company's performances. I don't know if you get what I'm saying, guys. So this is my opinion, the way I see it, according to the way I did my research. So the market is moved by traders, but is influenced by the performances of the companies and other economic events. Do you get what I'm saying? So me, when I trade, I look at the charts on their own. So I trade pure price action. So I look at the charts, the way they move. I look at what the price is telling me. Do you get that? So there's a strategy on how to go about, even whenever you're looking at the charts, on how to kill NASDAQ. So first things first, I'm not gonna waste your time and beat around the bushes. So I'm just gonna go straight to the point whenever I'm killing NASDAQ. Okay, first things first that I do when I hit my charts. So I just open my NASDAQ chart. This is a NASDAQ chart. So this tutorial is only for people who already know how to trade. Maybe they're not profitable, or they don't have a strategy, or they don't know how to trade. So there's so much amount of information here in the forex industry, but you don't have to focus on so much amount of information that is available to you. So one thing that you can do for yourself, to do yourself a favor, is to get a mentorship, get someone who can teach you the correct information, teach you the correct way of how to go about when it comes to killing the charts. So mentorship is a good thing, guys. You should get yourself some mentorship, because if you get a mentorship, you are able to take a shortcut on how to kill the market, because this thing is very complicated if you don't know what you're doing, and life is going to be hard for you if you don't know anything about the markets at all. So yeah, so without any waste of time, guys, let's just go on. So this is how you do it whenever you want to kill NASDAQ. So me, I'm using pure price action strategy, of which I look at the price, what the price is telling me. To get it, so I trade supply and demand, and I also trade support and resistance. I also trade the Fibonacci retracement, and I also trade the trend lines. Do you get it? So I kill the markets in many ways, guys. Like, there's no one way of killing a cat, so there's many ways. You gotta find and utilize each and every way that you find on the market. Do you get that? So yeah, let's just jump right into it. And first things first, when I want to kill the chart, let's say now I'm here to trade. I trade two sessions, mainly my London and New York session. Do you get that? So those are the sessions that I trade, guys, London and New York. So London session, I have a system of mine here that tells me the sessions, when do they start, when do they end. So unfortunately today is the weekend, so I thought maybe like I could just like do the tutorial on how to kill NASDAQ. So I'm gonna do another tutorial on how to kill NASDAQ. So and yeah, so that system shows me the sessions that we are on, and the session closing and the session open. So there's this thing which people say there's an event during half past 3, because they see the volatile movement that is done by the markets, and they say that that's an event and all that. There's so many amount of opinions here in the forex industry, and like once you get lost, you're gonna like do the wrong thing. So hey man, unfortunately man, like this information is not free. The accurate information is not free, it's for sale. So you're blessed when you get it for free. So yeah, that's it, guys. So what I'm doing right now here, I'm trying to set my chart to be flexible like the trading view. I also analyze on trading view, but I also use my charts here on my trading platform, so that I can like know what to do and how to go about with it. So even this one like is clear and is okay and is accurate to analyze with, so you can analyze here on your charts as well, same as the trading view. Do you get that? So trading view is okay because when you analyze, your analysis stays there, it doesn't go anywhere, so there's no interruptions at all. So okay, now first things first. Okay, I'm gonna start with my trend lines. To get it, guys, let's start with the trend lines. And when you analyze the NASDAQ and kill it, so this is my way, not any other person's way. So if you're relating to what I'm doing here, congratulations, big ups to you. But if you don't, then stick to your way. To get it, because we're doing the same thing but in different ways. I don't know if you get what I'm saying, because we all trading, we all making money. To get it, in the same place, so we see the same thing in a different way. Do you get it? So regardless on how you see it and how I see it, so that doesn't make any difference. Do you get it? We all in the same marathon, we running the same race, we chasing the same dough, the same money, the same bag, the same prey. You get that? So this is the same prey. We all hunters, we're hunting the same thing but in a different way. So which means we got like different weapons that we use to attack the market. Some people, they use systems, some they use robots, some they use manual trading. Like myself, I used to use systems and robots, but they didn't work out for me, and the indicators and all that. Do you see that? So now I focus on the price, because price is the most important thing, guys. Price is the most important thing. I repeat, price is the most important thing. When I'm talking about the price, I'm talking about this movement. This is the price, the way it moves. You see that the up down, up down, up down, impulse correction. This is the price movement. So that's the most important thing that we have to like master, look at, and know what is it doing, what is it trying to tell you, where is it going, where is it coming from. Do you get that? So I usually like start on a daily just to plot my trend lines, so that I can know the overall movement of the price. Do you get that? So when you're done setting your thing in your chart like the way I did, you can set it up here to make it flexible like I did. You see scaling, and then yeah, the way I did it, and then you press OK. So your chart is going to be flexible like your own trading view, guys. You see, when you analyze on trading view, your chart becomes flexible. You can move it all around, can stretch it, yeah, and all that. So yeah, now let's continue. So on a daily chart, I'm going to look at the overall market structure. The overall market structure, guys. When I'm talking about the overall market structure, first of all, what is the market structure? The market structure is the movement of the price, the up and down, going when the market is going up and going down and going up and going down and going up and going down and going up. So this is the market structure, guys. You all understand what I'm saying? So this is the market structure. As you all can see, I can call this the high. This is my high, and this is my lower high. No, it's a lower high because it's going lower, so which means now the price is going lower. Do you get that? When the price is going high, I'll show you what's that going to be. This is my lower high as well, and this is still the same level as this one. This is the lower high as well, and then now we're trying to, the price now is about to create another lower high here. If it goes down, if it happens that it goes down. So this is what you have to see when you pop your charts. You don't have to draw all these things. Do you get that? So you don't have to like draw all these lines and start seeing that okay, now the price is creating a lower low and all that. Do you see that, guys? This is a lower low that was created by the price. Lower low, double click, lower low. Do you see that? So now when the price is moving like this, we're saying the price is on a bearish movement, so is on a bearish trend, which means is downtrending, in other words. So we are going down. Do you get that? So you can see that the price is looking down, which means now that the price is downtrending. Sorry about that. The price is on the downtrend. Do you get that, guys? I hope you guys understand. So this is what you look at. The price is on a downtrend. So I'm gonna be quick so that I won't make this video long and take hours. So that's what you do, guys. You start on a daily time frame. You see the overall trend, right? So that's your overall trend, but this is not how you draw your trend lines. I'm going to show you how to draw a trend line. So I was just showing you the trend, how to spot the trend without even drawing anything. So you're going to see that the price is going up, is going down, up, down, up, down. As you can see, the price was going up this side. Do you see this? So this price, this was the uptrend of the price. So the price this side was going up. So this was the uptrend. It was doing the same thing. Down, up, down, up, down. So this is the market structure. That's the structure of the market, the way the market is structured. Do you see that? The up, down, and up, down, just like that. High, 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 low, lower, low. So this is what the price does when it moves. It creates a market structure. So this market structure, you can get it on any time frame. I repeat, this market structure can get it on any time frame, starting from 1 minute time frame up until your monthly or your daily time frame. So this is where you can get your market structure, guys. Okay, moving on. So now I'm going to delete these trend lines, delete all selected, delete my market structure as well, because you guys already saw what the market is doing, right? So I'm deleting this market structure. This is not something that should stay here. It's gonna like fuck up your chart. Sorry about my language. This is gonna mess your chart up, as you can see, right? Okay, we already know that. So now we're gonna remove this. Can keep it, but we're gonna remove it now because of something that I want to show you guys that you guys should do. You get it? Okay, great. Now we want a daily time frame. Me, I start from the daily time frame. I don't care about the month and what and blah 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 blah. Okay, that's it. So now moving on, guys. As you can see, now we're going to plot our trend line. Now we're going to draw our trend line, nice and easy. Do you get it? So this is how you draw your trend line. This is the first touch. The first touch should start should touch a week, guys. Your first touch of the trend line should touch a week. The first touch is this one. As you can see here, I'm gonna point it with an arrow. This is your first touch, guys. Okay, did a copy, very stupid. You see that this is your first touch and this is your second touch, guys. Do you get that? This is your third touch and this is your fourth touch. Do you see that? So as you draw your trend line, guys, this is what I want to like to address here, guys. I know like we have so many geniuses in the market, you know, Einsteins of the market, you know, Bomis, they know it all. So they draw their trend lines touching the wicks only. To get it, they only touch the wicks from there, from the top to the bottom. To get it, that's what they do. Or from the bottom to the top, they touch the wicks only. So one thing that I've learned from my other mentor that mentored me, he said that whenever you draw a trend line, the first touch should touch the wick, but the rest should accommodate candlesticks without even cutting the candlesticks. Do you understand what I'm saying? Your trend line should accommodate candlesticks without cutting the candlesticks, guys. For those of you who doesn't know the candlesticks, these are the candlesticks. This is a candle. As you can see, we all have candles in our homes, right? So these are the candlesticks. So you have to like learn what are the candlesticks, their language, how do they move, and you know, like, yeah, what do they mean. So without any waste of time, I'm not gonna go. This is not a candlestick video, so I'm going to make another candlestick video so that you will understand. So now I'm talking about my analysis drawing trend lines. Do you get that? So yeah, first trend line drawn, check. The second one, we can copy this trend line as well to put it on the bottom here, but we still need to adjust it, right, so that we can accommodate our thingy, our touches. Do you get that? So we have like this touch, of which is like is the major touch, so that's why, and then the rest should accommodate candlesticks, right? So it should accommodate candlesticks. So as you can see, guys, like we had so many touches here, the trend line has been touching. Do you see that when you accommodate candlesticks, you're gonna get such touches, and then like this is where you're gonna like be executing. So you'll see when you go to a smaller time frame that the market like tried to break through this trend line, but it failed, closed above it. Even here touched it, really nice sniper entry. Even here broke it, failed, came back, closed above, came back again, broke it, failed, closed above. Even here it did the same thing, so it failed. So these are also the touches that we see that are done by the market. As you can see, you see that? So that's the touch there, and this is another touch. So there's so many touches on this trend line, of which like it makes it very powerful, guys. If you see so many touches, which means this is the most powerful trend line, as you can see. So the daily trend lines are the most powerful trend lines. If the market break the daily trend line, then you should know that things are going sour now. We're no longer proceeding with the same direction of the market, which means now we're no longer downtrending. Now let's say the market breaks this trend line and close above it, you know. So if it breaks this one and decide to push to the upside, so which means now we're no longer downtrending, so the trend have changed. So you should always follow the trend, because the trend is your friend, guys. The trend is your friend. So that's the most powerful thing. So you must make the trend your best friend. Okay, moving on. Now that we've done plotting our daily trend line, so we are moving on. Okay, before we move on, even on a daily now, right? Okay, let's move on, and then I'm going to show you what is it that we do. We don't draw any supply and demand. Now we're just plotting our trend lines only, guys. Okay, moving on to the 4-hour. As you can see, the areas are still there, guys, and let's move on, see if we can draw another trend line here on the 4-hour that is going to accommodate us, our analysis. Okay, here on the 4-hour, as you can see, guys, like we have the first touch there on the trend line, then we have the second touch, of which it big now is cutting the candle, but you don't want to cut the candle. So the only thing that we can do is to accommodate that candle there. As you can see, guys, let me adjust this one because of that wick. So that wicks are very important, guys. Like you should touch the wicks. Wicks, they tell a story, guys. You see that? So now that we are here, as you can see, guys, here on this area, the market broke, closed above, and then retest. This is a retest. As you can see, there's a nice rejection. I'll show you on a small time frame what happened here. This is a retest of this trend line. As you can see, trend lines, they work, guys. Like, you should believe in your tools. Undermining your tools, it's a very bad thing. So as you can see here, we have a rejection. It broke out this trend line, which means it violated this trend line, came back, retested it. So this is a retest of the trend line, and the market pushed to the upside, as you all can see. Okay, moving on. We're done having our trend line, so don't have to put so many trend lines because we might end up getting confused, right? So let's see if we can't get another trend line from here. Let's see. Okay, we have nice touches on the 4-hour. First touch, second touch, great. See, this is a trend line. Now we already got our trend line, as you can see, guys. First touch, second touch, and third touch. So we was gonna like put this trend line here inside to accommodate candlesticks, right? But now we cannot because the market already here. So now we're trying to see what the market is trying to do to get that. So we have to like accommodate this this market as well, to see what is it going to do from this area on, because now we are moving on. We don't care about the past. We look at the past, but you don't stick on the past. We focus on the present to get that. We trade the present by looking at the past, but you don't stick to the past. We stick to the present. So this is how we do it, guys. So yeah, moving on. Now we're done. We have our first touch, second touch, third touch. Okay, great. We're waiting for what? Maybe the market might respect the trend line and push to the upside. We'll see when it breaks the structure, pushing to the upside. If I'm talking about the structure, like I showed you the structure, the down, up, down, up, down. So even here it is a down, up, down, up, down. As you can see, this rejection is a low. And then when the market comes here and open another candlestick on a high, let me zoom in so that you guys can see what am I talking about, because these mentors don't show you this whenever they give you free videos, guys. This is a free video strategy, so this is a low and this is a high. Great, right? So we want to look at the market when it breaks this high. Do you get that? So if the market breaks this lower high, because the market was going down, right? So it is creating let me go back again, because I know some of you find it difficult to understand what I'm saying. So let's the lower high, this lower high, the lower high. Do you get it? So here in this area, this is a lower high next to this candlestick. You see, this is a lower high. Do you get it? Another lower high is here on this candlestick. So whenever the candlestick go down, it goes up. Okay, when it rejects, which means now it's going up, it's creating another high so that it can drop lower. This is a low. Do you get it? This side is a low. Let me put it with the text so that you guys can understand, because I know not everybody is very quick to understand this thing. This is a lower low. Do you get it? So the market here came, created a lower low and another lower low. So in this area only, guys, in this area only, let me separate this area with this. So you see, from my vertical line pushing forward to my to your right hand side, going this side. Do you get that? So from this side to this side, so the market here created a low, high. So this is a market structure. Like I said, the market structure is created everywhere, guys. Like, you should be able to see that. You should know what the market is doing whenever the market creates a market structure. So you should know what the market is doing. So this is the market structure, guys. As you can see, the market created a tiny market structure here on a lower time frame. So all the market structures, they matter, guys. It doesn't matter whether like you trading, but me, I don't trade 5 minutes, 1 minute. So I trade 15 minutes and upwards to get it. So I look at the high time frame, but I stick to 15 minutes and 1 hour 30. Yeah, but most of the time I'm on 15, because 15 I can wait for the 15-minute candlestick to close so that I can do my movements. I can't wait for 1 hour candlestick to close it before I make a move. So that'll take me a while, because when I approach the market, I'm a sniper man. So I'm that sniper man who can't wait for an hour or 30 minutes. So I can only wait for 15. 15 is too much for me to wait. So yeah, me, I'm an intraday swing trader. So I hold my trades for a day, and then like I can call myself a day trader because I trade throughout the day. So I'm not a scalper. So yeah, but you know, whenever you day trade, sometimes you scalp. You don't have to say that you're a day trader and then you don't scalp, because you scalp. When you scalp is whenever like you get in and out, in and out, in and out, in and out. So if you're a day trader, day trading and scalping is almost the same thing, guys, because we go in and out as well on a day trade, because we can hold another trade and then it's going to take you a few hours, and then like you exit the trade because you see things are changing now, and then the market gives you another direction or another entry confirmation, and then you enter on that direction. Do you see that? So going in and out, in and out, in and out. So that is called scalping throughout the day, regardless of the time frame. And yeah, because like you can scalp on 1 hour, you can scalp on 15 minutes, you can scalp on 30 minutes, not only on 5 and 1. Do you get what I'm saying, guys? So all the lower time frames, starting from 1 hour to lower time frame, so that is part of scalping. If you trade those time frame 1 hour going down, you are scalping. So case closed. Regardless of your opinion, what you say, that's up to you. Okay, great. Now moving on, guys. Let me not waste your time. I'm done showing you what the market is doing here. So we're waiting for the market to at least give us a push to the upside and break this market structure and give us another low and push to the upside. Do you see that? Which means now the direction have changed, which means now we are pushing towards the upside. But this is a 4 hour. We can't stress much about the 4 hour time frame. Do you get that, guys? So let's just delete this analysis. As you all can see, I hope you all saw that analysis. Great. Now moving on, I'm done trading. I am not yet done plotting my trend lines, because we are not trading 4 hours. So we are trading the major we're not trading the major trend line, time frame. We're trading 15 minutes, so we have to plot our trend lines until we reach 15 minutes. As you can see, we're still on this zone here, so we accommodated everything. Great. And now that we are here, what is it that we have to do from here? Great, that's a good question. Let's see if we can get a trend line here, our resistance, because like these are counter trend lines, guys. You should research a counter trend line. So as you can see, the resistance trend line, they work as support and resistance as well. As you can see here, they also forming a pattern, of which is the rising wedge. Do you see that, guys? So we might get something like this. The market might bounce from here, push to the upside. Sorry about that. So as you can see, this is a rising wedge. The market can push to the upside, push to the downside. Must see something like this. So it might happen. I'm not saying this is gonna happen. I'm saying we might see something like this when the market do this, because this is NASDAQ, is very volatile. It can do something like this, push to the upside. Do you see that? Or break this trend line, do a bit of a retest, and drop to the downside to retest this trend line. Do you see that, guys? So this is what the market can basically do. Do you get that? So because we are not done analyzing, we're still analyzing. Remember, we're still analyzing. This is called analysis. When you do this is called forecasting. Forecasting is part of analysis. Do you get that? When you analyze, you can forecast as well. Do you see that? So now let's remove this forecasting, because it's gonna confuse us. We already know that where we at, the market might do that. Now you can remove it, right? So that your chart should always stay clean, so that you can see everything. Because this is your enemy. This is your enemy. You can't fight your enemy if you can't see them. So you need to see your enemies there, guys. So you have to see your enemies clearly, so that whenever they start trying to come at you with another angle, you'll be able to fight back or block or execute, or I don't know, whatever they call it, decapitate. Yeah, that's English, guys. Okay, great. Now moving on, guys. We on 1 hour now, right? So you can go to 30 minutes as well and draw your trend line on 30, and let's see if we can get ourselves a trend line that is going to be to act as a confluence on our analysis. Confluence is the use of so many confirmations, guys. So for now, we are still stuck on trend lines, right? We're still drawing our trend lines. Remember, on other time frames like the major ones, I didn't draw the opposing trend lines. Okay, I drew support. This one I didn't draw because already this one is violated, so I can't draw this thing because now the market changed direction, right? So I'm focusing on this one because the market might respect the resistant trend line or the supporting trend line. Okay, let's move on. I hope you guys understand why I didn't do that. Don't get confused. Do you get it? But the most important trend line is the one that the market is approaching. Let me show you. It can be, but the most important trend line that we have to focus on, because the market, remember, the market is moving forward, right? It's going there, that side, so we have to like focus on this trend line. But here in this condition we can focus on them. They're both important, guys. Let me not like confuse you. They're both important. Support and resistance trend line, they're both important. Let's stick to that. I don't want to like mislead you guys and give you the wrong information, or else like I wanted to give you the correct information to go about killing this NASDAQ thing for free. I hope you guys like that. Okay, now let's see. So this is just a week. A week counts, because when you go to a smaller time frame, this is a movement of candlesticks. The candlesticks, they were moved. Remember, this is the coded system. This system is coded, guys. As you all know, that this is a code. So the market is coded, so we have to like respect each and every number, because there's numbers here. These numbers, these candlesticks are coded with numbers, so each and every number matters, guys. You see there's a number here, and this is a zone. I think this is a round number, as you can see. You see, it's 800. If you can round this off. Oh, sorry about that. Okay, let's redo it. Double click. This is a round number, guys, as you can see, but you don't have to focus on that much, because that's information overload. You don't have to do information overload. See, this is a round number, exactly like I said. You see that? So it's very important to accommodate round numbers as well. As you can see, now we want this trend line to be violated. So we have first touch, second touch is the weak, and then we don't have third touch, so we can stretch our trend line here and keep it there. You see that, guys? So as you can see, there's New York here, Tokyo, London, New York. So this is what I was talking about. My system shows you the session. So whenever you approach a session, my system show you that now we are here on this session. Do you get what I'm saying? So each and every session comes with now colors, so it gives you a different color for a different session. So these sessions, they have their colors. So me, I start trading from here, London. When the London opens, that's when I'm gonna start looking at my entry points to get it. But I don't just like jump in when the session start opening, so I jump in and start executing my trades. No, we don't do that. Remember, we analyze. We are snipers. We are in a military here. We are in a war. So before you execute, and we have like limited bullets, so before you execute, you need to make sure that you are aware of your target, and then like you're aiming at your target. You don't just like execute just for fun. Do you get that? Because whenever you trip, you lose a bullet, and the bullet is equals to your money. So that's it. So you have to like focus. So I usually trade after the London, after the Tokyo close. On the Tokyo close, I trade. This is when I execute my trades here in this condition, because I already see that okay, now it is a series of bearish candlesticks opening, pushing towards the downside. But I will show you, I don't just like execute because the market now is like this. I will show you when I reach my 15-minute time frame, what am I gonna do, what will I do in that condition if the market was here before dropping towards the downside, right? So but that's the past tense. I will show you whenever the market opens. What did I do in this condition? But I will show you whenever London and when Tokyo closed, what happened here and what made me to take this sell trade over there, guys. As you can see, okay, let's go back to 30 minutes. We already have our 30 minutes trend line. Now we're going back to 15 minutes to see if we can't get ourselves another trend line here on a smaller time frame, because this is where the magic is happening. To get it, okay, as we can see here on this, in this condition, right, the market in this condition was pushing towards the upside. So the market was pushing towards the upside. The reason that I like NASDAQ is because like it has clear movements. The movements are very clear and beautiful, so we had a trend line break, as you all can see. Remember, touches accommodate, the touch is very clean, Okay, great. You see, so we have like our first touch, second touch, third touch touched, and then the fourth touch failed, guys. As you can see, it broke and closed outside the trend line. Then that's when the market started dropping. But you don't just like right away jump into the market and start executing your trades. No. So we have another trend. We have another pattern that is forming there, of which the market is creating. And as you can see, do you see that? So this is a rectangle. So me, I call them rectangles, guys. I can no, this is not a rectangle. Sorry, this is a triangle, which means it's a wedge. I can call it a wedge as well, but it's falling. As you'll know, when the market is falling, this is a descending triangle. Yeah, descending triangle. So I see a descending triangle here. You should look at those, guys, because they help you see and analyze. Okay, when you put your trend lines, they give you a clear indication on what is the market trying to do, in this particular moment. So as you can see here, the market broke here and then didn't close outside, but it rejected, but the next candle opened outside, and it opened outside and it started dropping. So immediately when you see this happening, guys, that's when you're gonna execute your trades drastically. So do you get that? This is where you execute your trades drastically. So because NASDAQ doesn't usually like retest that much, so you can't be waiting for the retest. Look at this. After the breakout, this I can call it a retest because it broke out. So I don't go to a smaller time frame, so I don't want to like confuse you. I just want to like show you so that you'll understand as to what is happening here in that condition as we are plotting our trend lines. It's accommodated, but it's not necessary because we're not trading this trend line, this what you call this time frame, so it's gonna mess with our analysis, guys. As you can see, this is a breakout retest. It has retested with this thing, with this candlestick, as you all can see on 15 minutes. So this was our retest, this one. But you see that on 15 minutes, like everything is clear. So after the break close outside, this is when you're gonna like go harder on it. Do you get it? That's where you go harder. You hold your trade, and then when the market give you another low, another high, and this is when you're gonna like okay, I can execute another trade, pushing the trend towards the downside. Do you get that? So yeah, this is basically it, guys, with regards trend lines, right? So you analyzed with the trend lines up until you reach this level, right? So great, but we're not done analyzing. We're still analyzing. We are not done yet. You can use this trend line strategy to execute your trades as well. When the trend line is violated, the market closed above or below the trend line, and then you execute your entry. You get that? So now that I'm here, I can't actually stress about going back to the high time frame to draw my support and resistance lines, right? So because I'm here, I can also start here on this smaller time frame because I already know what is going on. My trend lines, they giving me the whole information about the direction of the market, what is the market trying to do. Okay, where we at, I can see. Great. Now I want to draw my support and resistance. So support and resistance, guys, works like this, guys. This is my support from the ground. I can call it the floor. Do you get that? This is my support from the ground, of which is the floor, my floor. This is my current floor now, where the market is bouncing, and this is like a ball, right? So when the ball comes, it bounce and it didn't touch here. I don't know what happened here, and then went to the upside, came back, bounce again. Do you see that? So it didn't bounce here again, it's still on the air. So this is the matrix ball, so it doesn't like, it can do the matrix, what the matrix funny moves. So it's still gonna like bounce in this area, right? So here's the secret, guys. This is not a secret, actually. This is what I'm telling you guys to do in order for you guys like to always kill NASDAQ. So NASDAQ has turning points, of which like I cannot call them support and resistance or supply and demands. I don't want to like complicate you with these crazy terminologies to get this. So I'm trying to make trading very easy. I don't want to like complicate it. So I can call it a turning point. Do you get what I'm saying? a turning point. So when you see a strong turning point, this is where you draw your line. When you see, okay, the market turned there, great, the market like dropped this towards the outside, but whenever it reaches that area, it turned. Okay, let me put my rectangle. This is what we call a rectangle, guys. It's a rectangle. This is a rectangle. You get that? So the turning point, this is where you put your support rectangle line. You get it? Whenever the market turns, you put it. You get it? So the market, as you can see, is still in a consolidation. This is what we call a consolidation. When the market is moving with the horizontal movement, the horizontal movement, this is consolidating. Do you get it? So I don't want to go deep with whatever information that people are saying. Now when the market does this, you must know there's no trend, the market is consolidating. Then the market broke the consolidation box, now it's going towards the upside, right? So as you can see, the market now pushed towards the upside. And when it breaks, what did it do? Broke this side and then retest. This is a retest when it come with this red candlestick, but failed to close below and retested. So from here, you are going crazy with your entries, guys. Do you get that? So this is how you use turning points to execute your trades. Before the market reached that area, as we can all see from here, we're not rewinding. Let's say now the market was here, guys. Yes, let's see, the market was here, right? As you all can see my screen. So the market came this side and it was dropping. You can start from here, from this area. The market started from this side, dropped, then it created what? A turning point here. This is where it found a support. So this is a turning point. You get it? So, and then from here it respected this area as well, as you can see where it rejected. So this is a supply area. So supply and demand, you must research about supply and demand, as you all can see. Do you see that? So this area was a supply, created a supply here. As you can see, the market was consolidating here, very confused, and then it left that area drastically, so with a big candlestick, and then the series of big candlesticks dropping towards the downside. So the impulse was very strong. So the supply and demand is the area where you see the market like this one. So this is your supply zone. You see that this is your supply zone, because you can see the market was consolidating here. You can see on a small time frame the market was going up, down, and then left that area drastically, so, and then it left a mark. You get it? This is a mark for you to be like, okay, whenever the market comes to this area, something might happen. So the market might bounce here and go to the downside again. So you can mark that area. You can either mark it like this or mark it like that. It's all up to you, because the market do so many things when it comes to these areas. You can either touch from this side, touch from here and go to the downside. You can either come here, touch here a little bit, go to the downside, or penetrate from the inside, reverse here, or go to the downside. But you have to look at these areas when you see them, so you can mark them and see what the market is doing whenever it reaches such areas of supply and demand. So same applies. If it does this from the bottom, strong push to the upside, you mark that area like, okay, that area is very sensitive, so you mark it as a turning point. You get it? Don't mark it as a supply or demand. So you can mark it as a turning point. As you all can see, I'm gonna show you guys, demonstrate it with some arrows. So we have our touch here, as you can see, our turning point, strong turning point. So this is a strong turning point. So this is a weak turning point. You can't like mark these turning points, because this is very weak. Do you get it? So the market won't really like respect such turning point. But if it does a heavy turning point like this one, so it turned from that side, and you can see that, okay, the market is shooting towards the downside, and then you're like, okay, cool, now I have to look at that area. That area is very dangerous. It's a turning point. The market, the NASDAQ always respect turning points. Where it turned is might turn again. So these are the area of sensitivity, guys. So these terminologies, you can write them down as I'm talking, as I'm speaking them to you guys. You can write them down so that you can remind yourself, okay, Mr. Forex Light, the limousine, the Primo Limo mentioned that there's supply and demand zones. There's areas of sensitivities, but yeah, we'll not focus on that. So now I'm giving you a strategy on how to kill NASDAQ. This is how you go about, guys. That's the strategy. So you look at these turning points where the market turned. See here, the market turned and then it came back to this side. What did it do? Touch that area. How do you go about executing trades in this area? So you put your orders here. you can put your orders. When you put your orders, as you all can see here, this is where you execute your orders, and then from here you can go like this. You see that when you buy when you put the limit order, here are the orders. So these are all your orders. We have a buy limit and a sell stop orders. Do you get that? We have a limit order and a stop orders, so you can do your research about those and how to go about where to put what, to get it. So, but typical example, if I come, if the market, if I want the market to touch this area and elevate with me, which means from here in this zone, this is where I will place my buy limit orders. Do you get what I'm saying, guys? This is a buy limit orders. Do you see that when the market comes inside, it has to like execute my limit order so that the market can touch here and push to what's the upside. So if the market was here and I want the market to come and touch here, so here you're going to place a sell limit order. Do you get that? So let's say now the market is pushing towards the upside and you want the market to trigger your order here to continue with you. So there you put a stop order. That's a stop order. There you place your stop order. If it is towards the downside, you can place your sell stop order by stop order. So that's another research that you can do by your own about the orders, how to execute the orders, right? So great. And looking at this area here on top of our trend line, we have a turning point, right? Sorry about that. Rectangle. So we have a turning point here, guys. This is a turning point. This is where the market turned, and what did it do after that? It dropped drastically. So we experienced a drastical drop. Wow, this should be the most strongest area ever, the most turning point area ever. So we're expecting the market, when it comes to this side, to do some drastical movement as well. Might even drop or break, retest, and move towards the upside. So this area can work for both sides. It can work for as a support or resistance. Do you get that? So this is our resistance zone, the ceiling. You see, this is a ceiling and this is a floor, as you can see, guys. So this is our floor. Currently in this condition, we are in a floor, between the floor and the ceiling. So we don't know where the market might be going. So it might be bouncing within, but we have some soldiers here. The trend line here is guiding the market, what the market is going to do. So we can still use that as well to see what this market might do, because we want to snipe it, my nigga. We're trying to snipe this market, guys. As you can see here, we have our first touch. There's another trend line going on here. As you can see, the market is trying to break it. Wow, this might be a signal as well. You see, so you can make your trend line, put your trend lines however you want, so long as you got nice touches. As you can see, it might make sense. The market might break, retest, push towards the upside to break this trend line. Do you see that? So this area here, we can't mark it as a reversal point, because now this area didn't make a drastical move towards the downside. Do you get that? So the area that we can mark as a turning point, guys, is this area. As you all can see, this area we can mark it as a turning point because it created a bit of a strong move towards the downside, but not drastically, so like slowly but surely. Do you get that? So this can also create a strong move towards the upside when the market touches. Like you can see, it came back, touched that area again, now it's pushing towards the upside. Do you see that? That's a turning point. The market turned here and pushed towards the upside, created the bigger one. This is a bigger move as well. As you can see, like it is almost the size of these ones, this side, as you can see. So bigger moves, you should learn to see the bigger moves. So when the market created big moves, and you'll be like, okay, cool, let me mark these areas. Typical example, for instance, look at this side. You see this side, the market turned there in that area. Do you see that? So the market turned like in this area, pushed strongly towards the upside. Okay, you can see that. Okay, here we had a bit of a rally. So there's the smart money concept traders, they call it the liquidity grab. I don't know, this they call it the liquidity, and then the market pushed towards the upside strongly. So with this, as you can see, so this can be the supply zone or the order block. or whatever the case may be. So yourself, you can just like memorize it as the turning point. Don't complicate yourself, because not everybody's from school, man. Not everybody graduated from the university, but you're trying to make money. So I'm talking to my street smart hustlers here, people who want to make money, not complicate themselves with the theories and terminologies of the forex market. So yeah, this is it, guys. Simplicity, less is more. Simplicity, guys. So as we are continue, as you can see, the market here came to this zone, and then it respected the zone. Do you see that? Push towards the upside when it reaches that zone, strongly so. And then it turned on that zone. I can call it a turn. Let's say it turned, and then from this side the market tried to turn again. So you see, it touched that zone and then tried to push to the upside. But hey, sellers were powerful in this condition, so they refused to allow these guys to push them towards the ceiling. They were like, ah, nah, guys, we are staying here on the floor. What did they do? They pushed the price towards the downside, and it broke this turning zone. You see, it broke this turning zone. You're like, okay, cool. And then remember, when the market breaks an area, it changes now. Remember, so this is our floor. So it broke the floor, and now the floor became what? The ceiling. As you can see here, what happened? So now the market, the price respected the floor, because now the floor is no longer the floor. Now we are underneath the floor, so the floor became the ceiling. Do you see that? So hence why the market came to this zone, respected it, and tried and pushed the price towards the downside drastically. So hence you saw the price dropped towards the downside. Do you see that? So this is how you use the turning points, guys. Like, you should look at these areas where the market turned and mark these areas. Do you get that? Even if with a drastical candlestick like this one, when the market turned, push towards the upside, you can mark that area. The market might come and test that area and push towards the upside. Same applies to, when the market turn in the area, in a particular area, and push towards a particular direction, mark that area. The market might come back and test that area to push towards the upside. Do you see that? Another example here, as you can see, there was a turning point here in this area, but this is a minor one. We can call it a minor turning point. You see, the market turned here, pushed towards the downside, came back to this area. It respected that area, didn't touch it, but it respected it. Do you see that? This area was very hot, dropped towards the downside. You see that? So these turning points are very important. Do you see that? So as you can see, even this side, do you see that the market turned here and then came back this side, touched this area, now it's turning. So these are turning points, guys. You can like call them turning points. They're not hard to spot. If you want to spot them like that, okay, I see a turning point there, market might come and turn again here, or respect that area. Do you get that? So yeah, these are basically the turning points. So this is how you use trend lines and turning points, support or resistance zones. Do you get that? So yeah, this is how you kill it, guys. From here, you can change your life with this strategy. So following it, obeying it. So yeah, so now we are done teaching you the turning point and the trend lines, right? So now you know how to draw your trend lines and your support and resistance. So let's go to a Fibonacci. So here is the Fibonacci, guys. This is a Fibonacci retracement, guys. Sorry about my Fibonacci, is very small and invisible. So you see that? So the Fibonacci, because the market is coded, do you see that the market is coded? So there's numbers going on, there's numbers involved here in the market. As you all can see, like, numbers don't lie, numbers are involved here. We're dealing with numbers. The candlestick move with numbers. We have pips, so you can like do your research about those. So there's pips, it moves with particular pips, to accommodate certain numbers as the system, as the way the system was coded. So but unfortunately the system, you cannot hack it. Hey, they're very smart. They did a good thing, because they don't have hackers of the market, so we can only hack it with our strategies and learning how the system works. So my advice to you is to like stick to one tool, one index, one pair, and trade it using, you can use this strategy as well. You can use this trend line strategy. It's called price action. You can use this price action strategy, draw your trend lines, your turning points, when the market breaks, close above, and then retest, and then you execute your orders. So I'm not going to be long with the trend line because my time is up now, guys. Like, we've been on this video. As you can see, guys, I'm going to start my trend line, my Fibonacci retracement from here. So this is a Fibonacci retracement. When I'm talking about the Fibonacci retracement, what am I talking about? I'm talking about when the market pushed towards the, sorry about that, the retracement is something like this, guys. When the market pushed towards the upside and breathe in and breathe out. Do you see that? So this is a retracement. The market pushed towards the upside, retraced, pushed towards the upside. You see that? Impulse, correction, impulse. Do you see that? So now the market does that. When the market does that, it creates a what? This is a low, this is a low, and this is a higher high, and this is a higher low, because we are pushing towards the upside. So when the market does that, what do you do with your Fibonacci? So this is my Fibonacci, guys. I will show you this Fibonacci settings and all that. You see that when the market does that, this is the first point. This is how you draw your Fibonacci. You take your Fibonacci level from the first point. Remember, we are going to the upside. It depends on your trend. If you are downtrending, we start from the top. If you are uptrending, you start from the bottom. From the bottom to the top, you apply. Do you see that? So we have A, B, C is your entry point. Do you get that? As you can see, guys, oh, this is accurate. As you can see, sorry. As you all can see, the market respected our what? Our 38.2. This is a 38.2 zone. The power of Fibonacci, guys. You don't have to only use trend lines and all that and the turning points. Even the Fibonacci is the last tool that you can use with this strategy, guys, with this price action strategy, price action forex light strategy, guys. The free one that might change someone else's life who can afford to buy a course or a mentorship. So this strategy was made out of different courses that I took, from other mentors, and I made up this strategy. Like, okay, cool, let me just like myself come up with this one and see if I can apply this one and use it. How will it benefit me? So this is how I benefited from this strategy. Unfortunately, me, I don't show off the lifestyle, I don't show off the monies, I only show off my entries, in my trades. So whenever the market comes to this zone, this is where you execute your orders with the touch. When it comes this side, you execute the orders, you buy orders. Remember, we're pushing towards the upside. We are executing the buys. Do you get that? So, and then your stop loss, that's what we call risk management. You see that your stop loss, you can put your stop loss below this zone. Do you get it? This is where you can put your stop loss here, just in case if the market comes, try to continue and test the 61.8 zone. So you know that, okay, now the market now didn't work out for me, and then it's gonna hit your stop loss. Or you can put your stop loss here. Do you get that? You can put your stop loss here below this area, and then when the market comes aside, if it traces deeply towards this zone, and then it's gonna stop you out. When it stop you out, it's best to be stopped out very quickly than to be stopped out too late. To get that, you should rather get stopped out early than to be stopped out late, because when you're stopped out early, the market corrects you. It tells you that now, not yet, it's not your time. And then when it comes to this area again, let me not delete this because I'm gonna need it. And then when the market decides, okay, no, I'm not retracing there, I'm retracing this side, and then this is what you do again. You stack in your orders again. You buy. To get that. So if the market still doesn't retrace from this area, and then you put a stop loss, like I told you guys, and it stop you out. Okay, cool. You're gonna lose a few cents, and then you buy again. So here, the market, most definitely, it will shoot to the upside, or it can shoot from this side. To get it, can shoot from 78. This is the strongest zone. Medium strong, medium strong, strongest, strong, medium strong, strongest retracement zone. So you should know those, guys. When the market reaches these zones, this is where you enter with your sniper entries, and then your stop loss, don't put it too far. Look at the can. Sometimes you should look at the volatility of the market, how the market moves, and then so that you know that okay, now this market is still moving in this manner. Is it still continue, or the candlesticks are drastical, or they are relaxed? You get it? Because candlesticks, they differ according to sessions. To get it, as you can see here, during New York session, oh, candlesticks are very crazy, man. They're retarded. So you gotta like be aware of that. During London, everything was still smooth. Then London and New York, this is whenever the session correlate. You know, when there's two sessions open at the same time, not at the same time, but when there's two sessions operating at the same time. To get it? So this is what will happen. Do you get it? When they overlap, yes, I think this is the correct way to use this. The sessions now are overlapping. Now they both open in this condition. So that's why hence you see that the market is doing some crazy movements. Do you see that? So this is how you use the Fibonacci, guys. Let's take it to the market. So taking your Fibonacci to the market. So remember, the market has high and lows. Remember, so the market from here, it rejected from here, and then because we are going towards the downside, it rejected from here, and then you put your low from here. Yes, this is where you put your, okay, sorry my trend line, do you see that? Sorry. So yeah, this is how you put your Fibonacci. You see that? So the market gave us the A, and this was our B, and then our C, as you can see here, guys, where I put my first touch of the trend line. Let me remove this trend line. You see this? When the market touch this area or come close to it, orders, sell. Put your stop loss above. Stop you out when it comes to this area. Sell. Put your stop loss above. Do you see that? Look what happened after the market touched this 61.8 zone. The market dropped drastically, so hit our TP1. TP2 unfortunately didn't hit, but TP1 was hit. Do you see that, guys? So in order for you to be on a safe side, you can always aim for the TP1. So your TP1 actually is this one. I think I should rename this as TP1 and TP2, right? Yeah, because like I don't want to confuse you guys. Let me edit my levels. Edit my levels. So this is TP2 and this is TP3. I can call this TP3. TP stands for take profit, guys. Don't get it confused. TP3, where's my zero level? My zero level is TP1. To get a take profit space 1. So this is take profit 1, guys. As you can see here, now it changed. Take profit 1 was hit. Take profit 2 was hit. So you can always aim for take profit 1 and 2 to get that. From there, you know that okay, this one TP3 is unlikely for the market to hit it, because like most of the time this is NASDAQ. NASDAQ doesn't usually hit TP3. So we can hit TP1 and TP2. TP1 and TP2 guaranteed, guys. Do you get that? So if you miss entering, if you missed this entry, you'll be like, okay, cool, now the market is still dropping towards the downside. Maybe you just open your laptop or your computer. Now the market was in this condition, it was dropping. Now you wait for the retest, and now you see the market pushing towards the upside with the strong candlestick. Do you get that? So you're gonna come here, put your low. Do you get that? So the market now is pushing towards let's say the market is here now. Do you get that? Yourself, you saw the market dropping and then you missed the entry. You're like, ah, cool, man, I'm so mad at this market, like I missed the entry. Okay, cool. What you have to do is to wait for the second entry. Second entry is going to be created by, this is A. Let me put this. Do you see this? This is your A, guys. Your A game. This is your A game, and this is your B game. Edit test. B area. Remember, what did I say? Where do you enter? On the C. Look at the C, guys. Look at the C. Do you see the C? Hey guys, I hope you see the C. I hope you see the C. Look at the C from the Fibonacci retracement. What did the C do, guys? Look, what did the C do, guys? Do you see that? So in this condition, you entered crazily here. insanely so. Look at what the market did. It didn't even hesitate, just touch that area, drop towards the downside, drastically so. Do you see that, guys? Free strategies, free price action strategy, guys. As you all can see, it's your boy Primo Limo from the Forex Light, guys. I came here to bring the light to everybody who's still in the darkness, to come to the light about this trading ish, man. Like, they should, start elevating, changing their lives. Let's hope this is going to change your life, guys. Practice using this strategy, guys. Like, this is a Fibonacci retracement. This one we call it Fibonacci retracement, about the Fibonacci and the turning points, the support and resistance. These are the turning points where you can execute when the market turns, and then the trend lines when the market breaks them and close above. This is how you can go about, guys. Right, are we clear? So yeah, I think we're done, man. That's it for the day from your boy Primo Limo. So yeah, from here, guys, you see, man, you saw that the market like dropped drastically. So good entry, man. Like the Fibonacci retracement, it happened in so many places, guys. Do you see that? Listen, maybe now we are here, we're still continuing towards the downside. You want to see the market? Look at this, guys. Look at this retracement. Look at this. Let's change now and put our A and our C. Damn, oh my god, look at this, guys. Like the retracement, you can get it anywhere, guys. You can get it anywhere. There's always a retracement where you see the market doing some up down. You should go crazy on it with the Fibonacci retracement. You see that? So you should be able to use this tool, guys. Do you get it? So the settings of the Fibonacci, guys, I don't know, I can't stretch this up so you guys can see all my levels, but my levels go like this, guys. As you can see here, you can add the 0 TP1 and 38.2. You see description 38.2, and then 18, 61.8, and 100, the first one, and then 0.78.6. You see the strongest reversal, and then TP2, it's minus, guys. There's negative this side. You should see that negative 0.27 is TP2, and then negative 0.61 is TP3, guys. I hope we are all clear. So yeah, guys, that's basically it, man. I even took an hour more than I said I will. So that's the strategy, guys. That's the strategy of the Forex Light company, guys, from your boy Primo Limo. Here it is, guys. Make use of this strategy, guys. I gave you the strategy that I use, guys, to kill the market. This is how I kill the market. I look at these areas. You should train your eye, guys. Like, train your eyes, how to see these areas. You should be able to see these areas every time when you open the market. This is what you should do. This is how you go about executing these trades. Execute the trades. Execute. Be the executioner. I'm teaching you guys to be executioners. Look at this area here. Let's see what we have here. Oh my goodness. Look at the 61.8. This is the 61.8. Check the A. Where's my B? This is my B. Look at the C, guys. Check. Do you guys see the C? Look at the C. The market pushed towards the upside and it created this. You don't care about this red candlestick dropping towards the downside. Nah, man. You put your thing in and you see, okay, the market now is pushing strongly towards the upside. Now I think this motherfucker, sorry about my language, I think this market might be trying to change the direction. You plot your B there quickly, so you gotta be quick, because this happens quickly, and then you gotta be able to think on your feet, So once it gives you the B, C is coming. Whether you like it or not, C is coming. Do you get that? So yeah, I don't want to be stressing you about patterns, the double bottom, the double top, and all that, cause yeah, man, there's so much information in this area. So use this simple strategy, simple information to attack the market. Do you get that? Use this simple strategy, simple information to attack this NASDAQ. I'm telling you, you can backtest, check it, do whatever, but you will see everything that I taught you guys works. You're gonna see it works drastically. So from your boy Primo Limo, I think this is it, guys. This is it. So yeah, the only thing that you can do, guys, please like, subscribe, and share this video, because like I did the best, guys. Like I did the best of me to deliver this strategy for free, guys. This is the strategy that I use myself personally. This is what I use to kill the market. I don't want to like complicate myself like, yo man, I have so much information. When I started trading, I had like so much amount of information. I did my research, I bought systems, I bought robots, but none of those things worked for me, guys, up until I got these courses that I've been through. I'm not gonna mention these courses, but I got these courses, guys, and then like from those courses I thought maybe like I was gonna get something that is very, they what do you call, they call it the holy grail. I thought maybe I was gonna get the holy grail, but unfortunately I did not get the holy grail from those strategies, guys. Only thing that I got was the very same information that's on YouTube, that is given for free. Do you get that? So I couldn't even understand that information because I never got it from someone that I actually like trusted. Because these YouTubers, man, they don't give you like the best of everything. They just want to like give you the taste of the information that you guys like get from them, so that you can come back for more and buy more, from them, thinking that you're gonna like what they gave you there on YouTube is not enough. There's this secret that they held behind, that they use, behind closed doors, whereas there's nothing, guys. These guys are still using the very same system that I just gave you guys. Yeah. And yeah, without any waste of time, guys, like I want to close this video, but I think there's something missing. You see, when it comes to fundamentals, guys, we also trade fundamentals. There's fundamentals and technicals. So you can use your forex, your FX book app, or website, to check the fundamentals. So you should check the fundamentals, where to check the forex fundamentals, and check the US dollar fundamentals, guys, because NASDAQ is also influenced by fundamentals. So you should check those fundamentals, and and keep yourself updated. So let me show you here. You can go to FX book. So where's my FX book? Oh, I do have FX book over here. So this FX book. You can check your events here, the economic calendar. You can check your economic calendar here and see which events might influence the market. So you should check like high impact. So these are the events that I use. I only like focus on excuse me, I only focus on USD events. Do you get that? So study these events, mark them, and see which ones are very are very beneficial for you. So this is where you can filter out all the events that are not necessary, the ones that you don't need, and the level of the impact that they have towards the market. So we can filter out this side. You can go to those three dots there and filter out everything that you don't need. So me, I only need US dollar events, because like that's what I've seen, that NASDAQ is influenced by these events. Do you get it? So the rest is going to be bonus, the rest is going to be a surprise, but like most of the time US dollar events, because NASDAQ is an American, I don't know, index, it's based in America. Remember, we're trading the interbank here, so the interbank is in the US. So yeah, so everything that happens in the US affects NASDAQ, guys. Like you should know that US is the one. So yeah, this is where you check your economic calendars, you filter them out, and then you filter the high impact. The rest you don't need, you only need the high impact. As you can see today, oh, one day, yeah, one day tomorrow, there's gonna be what's the name of this, balance of trade. I think that's the event as well, if I'm not mistaken. You can also check the holidays here as well, if we have the holidays, because during holidays NASDAQ doesn't move, but during the US holidays only, I repeat, during the US holidays only, NASDAQ doesn't move. Do you get that? Keep up to date with this markets. Okay, allow, great, and then you block. I don't want no notifications. Wait, I don't want to sign up either. Do you see that these are your holidays, guys? As you can see, listed here, blah 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 blah. But the most powerful holidays that stop the market from moving, it's the US holidays. US holidays. Look at the US holidays, guys. Okay, from your boy Primo Limo. I think that's it, guys. I gave you everything that you need for free, guys. So stay tuned for more of these videos, guys. Maybe I might come back and keep on dropping such videos and to help you guys like kickstart your trading career and move on, doing. I'll be using the very same techniques, guys, very same techniques, how I go about. Do you see that? How I go about with this market, my trend lines, my Fibonacci, my turning points, like I said. Do you see that? So yeah, guys, that's basically it, man, from your boy Primo. And this is it, guys. Cheers.